It's about knowing yourself and your style and what works for you. Now, information overload. And that's, I love that you brought up the indicators. And that was actually my next question, to ask you what your favorite indicators are. Everyone has their own indicators. There's no perfect one. However, the problem, in my opinion, is that there are too many of them. And there's just too much information, and we have bandwidth constraint. So the more information, the worse it gets. We need to sort through, and at some point, all this information just becomes noise. And so, and there's a lot of opaqueness out there. And I'm going to give a quote. This is a great guy, Herb Simon, who's the father of behavioral economics. He said, "A wealth of information creates a poverty of attention." And I think that's so true in trading. And so my question to you is, what are your favorite indicators? I know you keep your charts clean. And how do you decipher signal from noise?
Yeah, the indicators that I use are pretty straightforward. I look at the new highs and new lows, as we just looked at a chart there. Mm-hmm. I look at the advanced decline line relative to the index, the S&P. I also look at the percent of stocks above their 200-day moving average on the NYSE. So those are three that keep me on the right side of the market. Then I look at the action of the leading stocks. You know, there are definitely some leading stocks right now. There's a good dozen, or you'd say, are real leaders. I'm watching those. Even if I'm not owning a position, I'm watching them. I want to see, is NVIDIA remaining strong and not giving back a lot of its gains, or is it breaking down? So I watch the leaders very carefully, and I actually I look at the leaders over a 10-day window, and I look at their distribution days in a leading stock over a 10-day window. 2 distribution days over a 10-day window is okay, it's normal. They can shake that off. It's kind of normal profit taking. When you get 3 or 4 distribution days in a leading stock in 10 days, that's a caution sign that maybe institutions are starting to distribute the stock. And you really need to probably go deeper in looking at the trend and where it is relative to moving average, but it's certainly on alert. So I look at the leading stocks carefully. I look at the RS line carefully, particularly as they pull back. What is the RS line doing? You know, there are so many indicators with all the software programs that it'll just get confusing. If you try to look at 12 indicators, you know, 5 of them will give you bullish signals and 5 will give you negative bearish signals, and 2 you won't be able to interpret, and you're like, I don't know what to do. You know, you get kind of frozen. So you have to find what works for you. Your indicators need to fit your time frame, need to fit your methodology. And everybody wants indicators to say, well, that's not good enough because that one's not predictive. I say, I'm not looking for predictive. We're not in the prediction business. We're in the interpretation business. So every day we want to interpret the action to say, is this, you know, strengthening the thesis of a bull market and the uptrend, or is it weakening it? And you want to be flexible to react. You know, should I be reducing positions, increasing positions, just holding positions and managing them? Everybody wants a predictive magic elixir indicator. It doesn't exist. All you can do, the best you can do, is stack the odds, and we just react and be flexible. It's important not to get locked into any mindset.